Well, the March Business Confidence Index results have just been released, and while it hasn't really moved the markets, it certainly gives us an indication of the mood of industry as we start to now see some positivity filter through regarding economic growth, not just globally, but here in South Africa as well. And to talk us through the latest numbers, Richard Downing, economist at SACCI, joins me now live in studio. Thanks so much, Richard, for joining us this afternoon. Well, we've seen the Business Confidence Index see an ever so slight movement. I mean, we've moved 0.2 index points between March and February, still staying pretty range bound. I mean, let's look at some of the pressure points here and what's still keeping that tight lid on things amidst what is an overall positive picture.
I think what we're seeing is, although this 83.2 is still, as you mentioned, range bound, it is quite above last year's level of March, because last year in March we actually struck a sort of bottom of the confidence levels at 78.9. So we moved 4.3 points above that that level, but we're still way beyond the 103.5 of December 2006. So business confidence not nearly where it is. And if you look at all the sub indices that we use in terms of activity, in terms of other sort of measures, the financial sort of part of the economy looks quite conducive, you know, to high economic activity, but it's actually on the real side we're still experiencing problems. Manufacturing, retail trade, as you know, and we can relate it back to the consumer and international trade. Now we make the point this month that actually your imports and export volumes actually moved quite substantially in March. So in February, actually, the figure we have, and that is quite positive for business confidence. And
let's run through some of the activity that you are seeing on that import and export side, where it has been decisive moves that we've seen this month.
Well, unfortunately, still, you know, the commodities are still the major movers, and we're still lacking behind in manufacturing, and unfortunately, the strong rand is also making it very difficult. We're actually moving quite substantially on dollar prices, and as you know, the rand strength is actually bringing down the rand value of that export, but still, it's good for the economy, but we must move beyond actually our resource exports into manufacturing, and that's where we're lacking behind, and I think we still have a long way to go there.
In your view, what does South Africa need to do to manage its global trade participation more effectively beyond that mainstay commodity producer and price taker field that it plays in?
Well, there's some things you can do. Efficiency is still a word, you know, that people throw around, but to some extent we've already reached some of those efficiencies. But in terms of volumes, we must remember one thing: we're far from international markets. Its transport cost is an issue, especially in terms of manufactured goods. We see that our electricity provision is a problem in terms of Africa, and that's very crucial actually to adding value in the domestic economy. And so therefore the question is, how much value can we add given these constraints we have in terms of infrastructure and all that type of thing. So but we have to move there. It's in terms of employment in South Africa, and the type of employment that must be created is actually, it's very important to get the manufacturing sector moving in terms of more labor-friendly costs, as I can put it like that, to some extent, and related that to productivity, because with our competitors, our peer groups, I mean, there you have real the wage cost, labor cost there is very competitive in terms of Africa. So that's one area where we might move. So manufacturing still, we know the construction sector is actually slowing down at the moment, although we might have some power stations and things coming up to be erected.
Capital letters.
Well, I mean, it seems like we might be lucky getting some of those loans, but still, I think that'll keep the things going. But we've seen a lot of construction work going on. The housing market, the building sector is still very muted at this moment, and especially in terms of new construction. So there's still a lot of issues to be dealt with, and we still a lot of those activities is well below the 2008 level still. Well, and 2008 was already down on previous years.
Coupled with all of that, we've got other things, other forces at play, really affecting sentiment on the ground in terms of politics, policy, governance moving forward. I mean, are we seeing stronger forces at play on the domestic front in that regard?
Yeah, unfortunately, I mean, you know, the past weekend we saw sort of a murder on a prominent farmer and actually a prominent political figure, but farm murders have been going on, and that's business. I mean, farming is business, and there's also other business people that get mugged, and you know, and the belongings taken away for just the value of it. So there's a big problem there in terms of the crime situation in South Africa. But with the World Cup coming up, I don't think this is very good news for us at the moment. Let's hope, you know, we can actually benefit the most from the World Cup, given the circumstances that's now sort of created. And then, of course, on the labour front, we've seen some of these labour demands, wage demands way above inflation. I mean, business is already stretched to some extent, you know, actually closing down. Liquidations are still up in February. So small, medium-sized business, where actually you create your jobs. That's where the pressure comes. And we hope we can pass that sort of situation and get the economy really going.
Well, undoubtedly we'll be having you back in studio to track developments there and some of the sentiment out there moving forward as well. Richard, we're going to have